In this video, learn how to spot when other traders are screwed to tee up great opportunities for you. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. In this video, a junior trader spots a failed technical breakdown that screwed other traders and sparked a terrific trade for him. Let's get to work on sharing these important trading lessons so you can grow your trading account.
So this is a trade I took on Nike following their earnings release. This is a little different than the trade we previously covered for the opening drive short. This is a midday reversal of the downtrend, and I wanted to capitalize on the long side opportunity. And the trade setups I used was a high day as well as an earnings anchored VWAP reclaim. And then above that level is just a simple wedge breakout pattern. All right, so I'll quickly go over their earnings release. This was a blowout earnings. I had put all the kind of the strongest stats in bold, and you can see their EPS was a huge beat, 95 cents versus 47. Their revenue was a pretty strong beat, a little over $1 billion. And then the key takeaways was their online sales had an 82% increase. And this is mostly due to the coronavirus pandemic and a lot of their retail stores being either shut down or having like a drastic limit on the number of customers that allowed to enter. And then a few of the other things was Chinese revenue was 6% increase, and then women's apparel had a huge growth of 200%. And then another interesting point was for their fiscal outlook for 2021. They had a pretty strong guidance going in, while most of the competitors within the industry were avoiding guidance due to all the current uncertainty. And then they also had a really strong outlook for the rest of 2020 for due to all like the holidays, Christmas, and
Whoa, right? I mean, whoa. These earnings are awesome.
Yeah. And you'll see by the pre-market chart, this thing just skyrocketed right when these earnings were released. And then some of the alarming stats was North American sales were down 2%. This is their largest market, so that's a pretty big shock. But I mean, in comparison, most of the other retailers, their North American sales were pretty horrible as well. So this is alarming, but nothing too fundamentally changing. And then I already mentioned they're limiting the storage of the customers.
It'd be good to know they decreased 2%. What is that in comparison to other competitors?
Yeah, exactly. I'm pretty sure.
But these numbers are blowout numbers.
Yeah, especially online sales and even women's apparel. This was kind of hidden in their report, which is surprising, but 200% increase. It's around half of the population in the world. So, I mean, that's huge growth in that category.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window. So don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
The first thing I'm looking for is the anchored VWAPs. So I want to see price consolidating above high of day anchored VWAP as well as the high from the earnings release. And this is just kind of like a simple line in the sand that shows me that most of the average price, a lot of the short sellers are either underwater or they're right at break even. So that shows there's a good opportunity for more continuation to the upside. And then after I see that, a few kind of categories I want to see is low of day set. And then a pretty strong consolidation. You'll see in this chart, there's around an hour and a half of consolidation after low of day had been set. And so that got me pretty interested. And then what got me really interested was when I saw this wedge pattern forming above my line in the sand, which you'll see on the chart. It was like 28.40. It was just a super key level for the day. And that also kind of aligned with a lot of the indicators I was looking at, and that was kind of my line in the sand where I believe shorts are trapped, shorts are going to hit out, and as well as bulls are going to be interested in that level. And then for entries, I want to enter as close to the bottom of the consolidation range as possible, kind of right around those anchored VWAPs I was talking about. And then just for kind of like a technical entry, I like to see held bids as well as pretty strong offers that are getting decremented right before the wedge breakout. And this was super clean on the tape that I can go over. And then risk is the previous swing low or breakout of the consolidation range. So hard stop is the swing low, and then kind of my fingers are on the hotkeys ready to hit out if I see this consolidation getting broken down.
How are you going to define anchored VWAP?
Here, I'll actually, I go into a good amount of detail in the next, right after this.
Sorry to cut in. I'll just be quiet now.
No worries. But so this was Nike the previous day, and I traded this the previous day for this wedge breakout, so I was pretty comfortable with the ticker, how it trades. And it was really strong previous day. I don't have it all the way to the close, but it ended up closing at high of day, and then when earnings came out, it was a blowout. And then overall market, SPY, this is following a pretty steep downtrend day. But then 2 days prior, we had put in a low, nice little consolidation, and then we got a consolidation above, breakout of this little trend. And then prior to the trade, there was a pretty steep sell-off in the market, but buyers started to get interested at this higher low. So that kind of added to my trade as well for a little quick reversal trade. And then this is the price action of the earnings release. And you can see by those numbers I was talking about earlier, the market just loved this. Around a 17-point beat, 17.50 beat, which is a huge beat for a stock like this. And then going into this was a pretty key range we were all watching in the morning, this really tight consolidation at all-time highs. And this is what got a lot of people interested on the opening drive short, kind of the breakdown of this consolidation. But most of our game plans in the morning surrounded this 128 level, 126 level, which correlated with this pre-market consolidation. I wasn't really too interested in buying at these 130s, 131 levels. I was more interested for a pull-in trade, a nice consolidation and a breakout, which ended up working pretty well. And then this goes to my anchored VWAPs that you touched on earlier. So I have one, I don't have the data previously, but this anchored VWAP from over here is anchored from the earnings release high. And then I also have another anchored VWAP essentially at high of day, which is, this is right before the market opened. So these are my two gauges to see kind of when short sellers are going to be underwater. And so you can see most of these pull-ins to the high of day anchored VWAP are rejected.
Let's think through that. So you could have done anchored VWAP from a lot of different times. You could have done it from after the earnings release. You could have done it from when we started opening, when we started trading. Walk me through why you're using the high there for anchored VWAP.
Like anchored VWAP typically works the best around news events. So I always will put one at the earnings release high, which is anchored. Yeah, so you can see I have it anchored right here. Because that's kind of the blow off top, and that's showing where most of the volume has been done. And that's also kind of shows me the best possible price the short sellers have. So like the premise of anchored VWAP, it's volume weighted average price. So I want to anchor it from the high of day. If I want to get flip bullish, I want to see price above this, because that's pretty much showing me the line where the best possible price is for short sellers.
When was that put in? What time of day is that put in, the high?
So this is around 9:20, yeah, like 9:20 on the dot, so about 10 minutes before the open. And then this previous anchored VWAP from the earnings release high was from the previous day, before the market closed. I don't have the time on here, but I would assume around like 6 p.m. Eastern.
That's good. And what do you think about the fact that we hadn't opened yet, there hadn't been a ton of volume yet, as much volume as could be done? How are you thinking through that? You're still in pre-market trading. Pre-market trading is still going to have a little bit less volume.
That is a really good point, because with this indicator being based all around volume, you can see these volume bars in after hours are nothing compared to the open. So this is going to be skewed a good amount, anchoring it in a low volume time of day compared to if I were to just anchor it right when this volume came in. But I actually did have it anchored right around this, and it was pretty much the same kind of price zone in between, right around this range. So I typically like to anchor it around high volume nodes, not essentially pre-market, since there's lack of volume and it's gonna totally throw off the calculation. But for this, there's still a good amount of volume in the pre-market, nothing compared to the open, but it was still a pretty good just kind of visual aid to see where the trend is going and when the trend to the downside is over. After using some of these anchored VWAPs for visual aid, this is exactly what I was looking for. So we came in right into this pre-market support. I can flip over. This 126.23 was a swing low of this consolidation, as well as a pretty strong level pre-market, and that ended up being low of day at the time of my trade. So we came in, tagged it once, tagged it as well. That shows me buyers are pretty interested in 126 was a key level for a lot of us for a pull-in trade. And then so after I saw this consolidation for about 2 hours above 126, we saw a little wedge breakout pattern, and then we saw buyers step in higher. So this was the key point that got me interested in the trade. We saw a breakout, but it didn't fail. It didn't come right back to 26 and consolidate. I wouldn't have been as interested at this 126 level. I got really interested after we had this breakout, and then we started holding above this pre-market support resistance level, and it shows we tagged it 3 times and the buyers wouldn't drop. Whenever it came down, the buyers got more interested and started buying it at higher prices. So I didn't want to get involved, although these would have been some fairly good entries. I just couldn't really spot out the risk reward. It was still a little iffy. The market was super weak this day. So I wanted to wait for that extra confirmation of price regaining anchored VWAP. And this also aligns perfectly with this 128.40 level, which was a really key level line in the sand for me. You can see it was the initial price that buyers started to step in, dropped out, and then it acted as resistance for about 2 hours. And then we finally got this big volume breakout over the level, and we started to cleanly hold it.
So look, I like how you're using anchored VWAP. That's a very useful measurement. Brian Shannon does excellent work with anchored VWAP. Love how you're using that. But anchored VWAP is just a technical indicator, right?
Yeah.
And so you're basically saying I'm making a technical trade.
Yeah, exactly.
And you're saying I'm using this technical indicator, anchored VWAP. When I look at this, I like the long there using the anchored VWAP, but, well, what am I going to ask next? What am I going to pose to you next?
Like, where's my defined risk? What happens?
No. I mean, no. You're making a technical trade. You're using a technical indicator. Okay, and so that part is good for a particular trade. But is that the only technical trade you can make? Is that the best technical trade you can make, particularly in something that has really good earnings? Or are there other technical trades that are better and you want to be thinking about as well, particularly in a blowout earnings stock, particularly in a really strong market?
Yeah, exactly. So I really don't put too much emphasis on anchored VWAP. It's more of just like a visual aid for me. And I really only use it when it aligns with, so 128.40 was the level I was looking at. Like without even anchored VWAP there, that's going to be my level. It just adds more confidence for me when...
I'll just say this and we can move on. But I've done this for a long time. The best trade in this particular setup is when it breaks the downtrend and the momentum is back up again. That breakout that you first mentioned, right there, breakout, consolidation higher. So that breakout right there, the momentum is back up. That is a trade that you can make a lot more money in, be a lot bigger in, make a lot more money in, really crush, more so than using that anchored VWAP, which is again a very legitimate trade. But just with the variables for this trade, strong market, strong stock, blowout earnings, good place to be buying stocks overall in the market that you did a nice job of showing on your daily charts for the overall market. I want to be in that breakout. I might even want to be in the double bottom support of the pre-market support area. I don't really love to make those trades because to me I want to be, that's just me though, but I could argue that that's a really good trade as well. But anyway, I just want you to understand that that's a great trade. That breakout trade right there, I want to be in that. When the momentum starts to go towards the upside, when the selling's out of it, and the momentum starts to come back in, you can get a full day's worth of buying just from that spot. You can get a couple of days worth of buying just from that spot. And so something to think about.
Yeah, that's a really good point. Right when you see that first sign of life, it's definitely worth getting involved. And if you're not too comfortable, at least maybe a half size, smaller size. And then right when you see the trade starting to work out for you, you already have a solid average price. And then you can start adding to your position and get much bigger with that confidence that you still have entries from a great price that shouldn't really be hit again if this is going to do a full 360 on the day or 180. So I'll keep moving on, but this is just kind of the reasons for my bullish bias on the trade. And then this is the kind of the technical setup. So I already talked a lot about regaining these anchored VWAPs, consecutive lower highs coming into this breakout. And then this is something I like to see a lot. It happens a lot more in this market that we're trading in. We'll see these flat bottoms, these like really clean wicks to a level. But then before the actual breakout, we'll see price leak through. And then buyers get interested at these cheaper prices. It kind of throws off all the weak hand longs that are buying within this consolidation, just risking a break. And then we get that instant rebid.
And you got some momentum traders short. You've sucked in some momentum traders short.
Yeah,
There's some momentum traders who are saying, as an active short-term trader, the stock's up too much. The earnings are good, but it's up too much. Should pull in, and they're sucked in short too. The other side of the trade are the longs hitting out and the shorts hitting in.
Yeah, so exactly. I love to be entering kind of at a point where it's catching everyone off guard. And then it gives you the best risk-reward opportunity. Is if all the longs are getting tapped out here, momentum shorts are hopping in, but I'm buying on this dip, this price really shouldn't be touched if this breakout's going to work. And then once we see these consecutive lower highs, that just gives you the really strong confidence in the trade. So coming in, this was kind of my entry zone. I actually had a really small size, about like 15% at 128.40. And this is kind of just based on, this is something you talk a lot about, Mike, just by price, just getting a little feeler size by price. I'm like, this is the the bottom of the wedge.
No, and I want to point out that that's such a obvious level, and these really do set up great trades. When a stock should be going down, and it looks like it is going down, and it's clear to lots of different traders, even amateur traders, and it leaks down, as you say, it leaks below support, that support area, that 128.50-ish area, 128.40-ish area, and then gets below those prices but can't, and then rebids above it again. Those are great trades. When a stock should have traded lower and doesn't. When a stock should have traded higher and doesn't. Those set up really good trades. And I would say one other thing about this not only being a very clear support area, as it touches 1, 2, 3, 4, 5 times, but that support area is also what? It also is above a pretty clear defined resistance area. Right before that, you had some resistance areas that were pretty clear. 1, 2, 3, 4, 5 times. Can't get above a certain price. Then does, pulls in 1, 2, 3, 4, 5, bunch of times it holds above that area as well. So that's a big important technical area. Everybody can see that. You don't need to be a certified technical analyst you don't need to be a CTA to see that trade. And so I'd add to that, those are really good setups. I mean, there's a lot of people playing around that area, and it's not going down, is it? They rebid it.
Exactly, and I also want to point out this is a 30-second chart. So just the time spent underneath this 128.40, which was my line in the sand for very obvious reasons we just talked about. So it could only spend less than a minute under this zone without rebidding. It had like 1 minute of steep selling, and then the next 30 seconds it rebid that whole move, and then 30 seconds later it was already back in that range. So after I see that, where this is kind of like a time trade, where if it starts consolidating and spending time under 28.40, it's a scratch trade. That's my whole thesis is wrong. The only way for this trade to work is if it drops and rebids within like a 2-3 minute period. So this is really based on time. This needs to drop and rebid instantly. Otherwise you could just get stuck in a pretty long chop period, or 128.40 starts to act as resistance, and next thing you know, we're heading back down to low of day. And so I'll quickly go over my trade management. These were just the feeler size by price I was talking about. This was pretty much nothing compared to my actual size. I think this is 15%. And then once we got these leaks below, I ended up getting really big in the position with a hard stop below these previous swing lows. And then, like I said, it's a time trade. So if this wicks down starts, I'm in from here, but it starts holding below 28.40, I'll probably just hit out the position for a scratch trade. But right when we see this rebid come down, sellers try to push it down again. We make a higher low, another higher low, and then we're off to the races. We get the wedge breakout. And I just covered a little bit of my risk for these initial entries. It wasn't much size. And then these are all just scale outs. And then up here is where I manage most of my size.
Hey, and so I want to teach you just a really advanced concept very quickly, and we'll talk more about this as you get a little bit more experience. But you see the consolidation. Can you just highlight the consolidation right before it leaks below that 128.40 area? And then it leaks below there. And we talked about how there's some people short now, and there's some longs that are hitting out. People are looking at that 128.40 area, and they're pouncing when it gets below there. Okay, and then can you see the top of that range before that, about 128.90? It hasn't really traded much above 128.90, 128.80. And so you don't really expect for that stock to get much above there. If you're looking at that chart and you see, hey, that's a lower high there from the before the high. And so what gets that stock to get above even that 128.80 area, and why you shouldn't make, you've got to be able to be careful about assuming this is going to make a new high when it gets above that 128.80 is what? It's that the people who hit that below 128.40 can cause the stock to trade above 128.80 and 128.90. The overexuberance that is breaking down and the volume of the people that get sucked in there can cause us to go above that 128.80 and 128.90 area. And we got to be careful that we assume this is going to go to higher highs because of what happened below that very important level. You got to be able to see the whole field and understand that it's good that it's above 128.80 and 128.90. It's good. It probably more likely it's going to work, but maybe all those people hitting it below 40 cents are the people that are covering, and we got to have time and a hold above that 128.80 before we can conclude that it's going to go higher. Does that make sense?
Yeah, exactly.
Advanced thought, admittedly. We'll talk some more about that.
So this is my reason to exit. This was actually probably some of my better exits on a trade, as you can see by some of these exits. And I was out of full size before this steep flush. And this was 100% due just to watching SPY right next to my Nike trade. And you can see, so this was the that 129 level that we had started to consolidate above, right in this range, above these swing highs. So this is kind of a do or die spot. If it doesn't hold this level, it's probably going to flush back down to this 128.40. So I'm being really watching the market, looking for any signs of weakness. And at this point, SPY is trading in a pretty tight range, as you can see here. And Nike was also in a somewhat tight range, some flat bottoms right at this 129. And then you can see SPY started to break down. So it was leading the breakdown at like 127 Eastern. SPY had already broken down and was breaking down through this consolidation range. But Nike was still holding this 129 level, holding 129. And then by the time Nike breaks down, SPY's already hit pretty hard. So I actually have a tape example of this. So I thought this was really good exit signal. It pretty much gave me a get flat signal 2 minutes before Nike broke down, just based on watching SPY.
Really good. Really, really good.
We're already into the breakout. We're approaching, we had just regained this 129 level. And this was also a previous swing high and psychological level. Also a lot of pre-market significance in this level. So I'll go. This is the first time we're starting to get that push above 129. We had a lot of failed attempts. So now for me to stay in this trade, I need to see 129 hold, as well as the market holding that consolidation range. And I actually split screen and show the market as well. So we end up getting this push. I take off around 35 shares just to cover more risk. Because this was also a level that we kept wicking into and we just couldn't hold. And I'll fast forward this a little bit. So right around, so now you can see this 129.15 is starting to be pretty strong resistance. This is 1, 2, about 5 attempts to break above this level and we can't. So now I'm on more of the defensive side. As I said, this is the level. It needs to see some more strength or it could fall out steeply if it doesn't hold these previous swing highs. And so we're not really seeing too much buy interest above 129, which is getting me, like I said, more defensive on the trade. If we can't hold 129, I'm really not interested. I was able to catch this breakout with really no downticks at all. So I'm expecting somewhat of a downtick. So now we start to break down and you'll see 128.99 is the actual level I'm watching. That's where all the size is at. That's what's been supporting in this range for a while.
Hey, really good job of noticing that. Super important observation you're making there. Where is a ton of volume being done? If it gets below that price, I expect it to go to a lower price and go find a new level. And you do that by watching where most of that volume is being done and seeing if there's anything unusual in the tape that you can pick up. So let's not gloss over that really important observation you're making there.
Yeah, because if I was just, let's say I'm just looking at this 129 level, it drops 129, I hit out just kind of out of panic, but then 128.99 is the actual true level, I'm going to be pretty irritated that I hit out for pretty much 1 cent of risk when I'm waiting for this 99 level to drop, not the whole number. And you can see it's starting to become a pretty strong level. Down here, you can see every attempt, it's having a really tough time breaking down from 128.99. And so now I'm getting pretty defensive. I have my default shares set for 50% of my position. Because the premise of this trade is I wanted to hold majority of my core for an extended move above into like the 130s. But I also don't want to be stuck holding my swing size if we do get a breakdown. So coming up, we see we finally regain this 129.05. And so now I want to see the buyers step up. I don't want them to step up 2-3 cents and just fall out like what's happening here. So you can see I actually cut half of my position in the 02s just after it was contingent, like we finally got buyers to step up, and then they just totally fell back out. And so now for the majority of my position, I still have, I'm having my risk on just on a break of this 128.99 level. Then I think I actually pull up SPYs as well. Here, so I hit out. So now we got another push. This is where you need to see buyers stepping up. So this is showing me that there's pretty weak buying in front of 129. We get that push into the 129.08s and we just can't hold. We come back down to this level. I was watching SPY at the time. This was at the exact time SPY was breaking down. And then you can see there, right when this 99 level was cracked, I hit out instantly in the 98s. I expected I wasn't going to get filled at the 98s. I was expecting a pretty steep fallout here. But I'll fast forward a little bit where I have, so you can see, this was just on my other screen. I wasn't recording, but I was watching SPY as well. I just wanted to pull it up on the tape real quick here. So you can see how drastically SPY was leading this breakdown. So while I hit out in the 99, SPY just had a nasty candle that broke out of the consolidation zone. And it was looking like it was starting to get out. So just by hitting out right when I saw SPY breaking down, no buyers were stepping up above 129. Those were just the only two reasons I needed to be flat on the position. And then you can see this was really good exit because we came all the way back down to my entry level, and then we ended up finishing at low of day. So that was just a really good tip going forward. When you're trading a market stock, sometimes you can get much better exits just by watching the market, especially at these do or die spots where you're going to expect a big fallout if this 129 buyer drops. But if you can get a little hint seeing that SPY just broke out of the consolidation, most likely this 129 buyer is going to drop as well, and we're going to get a pretty steep flush.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.